Okay, and welcome back, students who are taking financial accounting, and we are working on the Chapter 2 exercises, Group B. And in this series of videos for these exercises, we were working on problem exercise 2-29B, and we're going to pick up where we left off in that in the last video we created the journal entries, and now we're going to post the journal entries into the T accounts, identify all items by date, and calculate the ending balance in each account. Okay, so I had said, look at the look at the format of the journal in the solution manual. I mean, that's what your journal entries should look like, right? Yeah, I scribbled an awful lot, and just for purposes of the video, but your journal entries should look like what you see in the solution. Now, here's my T accounts, and I'm going to post the journal entries into these T accounts. Again, look at the solution for the correct formatting of the posting of these T accounts. It told us to write the date, which you should have, and you should have the label for balance and things like that. I'm not going to do that just for expediency and purposes of this video. But if you look at the journal entries in the solution, you'll be able to follow along as I post them into these here ledger accounts. So my first entry was a debit to cash and a credit to common stock, right? So I have a debit to cash for 50,000. So on the left-hand side, I'm going to put 50,000. And if you look at the solution, you'll see that it has the date September 2nd there. Okay, you should have that date, but because I don't have space, I'm not putting it. All right, I'm just going to put in the debits and credits. So I had a debit to cash for 50,000, and I had a credit to common stock for 50,000. Now, before I enter in the next entry, I want you to be able to, see why the T account is a valuable tool. Right? You can look at these accounts and you can see that, remember, we're taking our journal entries, which the debits equal to credits, and we're now posting them into the ledger accounts. So if I'm posting the right amount on the right side of the account, meaning the debit or the credit side, I put it in the proper place, you can visually see that my debits, I have a $50,000 debit here, I have nothing, 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 and then I have a credit of 50,000 right here. So you can see that the debits equal credits, and that's the one of the great big helping hands of having T accounts. It's a tool, and this is the debit side and this is the credit side, and it allows you to analyze and visually see the information to help you do the right thing. Okay, for my next journal entry, I had a debit to rent expense and a credit to cash. So my debit to rent expense was for $1,750, and I credit cash for $1,750. Okay, and if you look at the T account for cash, right, you'll see that the date is September 3rd written next to it. Okay, next entry is debit to equipment for $1,400 and a credit to cash for $1,400. So I have a debit to equipment for $1,400 and a credit to cash for $1,400. Right? Now again, if I pause and I take a look, if I add up my debits, right, I have 50,000 here, 1,400 here, and 1,750 here. Okay. And then if I look at my credits, I have 1,750, 1,400, and 50,000. So you can see my debits still equal my credits. All right. Next entry, debit to furniture for $2,700 and a credit to accounts payable for $2,700. So furniture is $2,700 and a credit to accounts payable for $2,700. Next entry is supplies for $225 and accounts payable for $225. So a debit to supplies and a credit to accounts payable for $225. Next entry was a debit to accounts receivable for $1,835 and a credit to service revenue. So a debit to accounts receivable for $1,835 and a credit to service revenue for $1,835. Right. Next one is a debit to utility expense, 285, and cash, 285. So a debit to utility expense for 285 and a credit to cash for 285. And then the last entry was a debit to cash for 975, debit to cash for 975, and a credit to service revenue for 975. Okay, so we've just taken all of our journal entries and we've posted them into our ledger accounts. And remember, all that posting is just a rearranging of the information. So those people who are having a struggle with, saying, oh, my debits don't equal credits. Well, if you made your journal entry where your debits equaled your credits, okay, now when you post to the accounts, I mean, your debits still should equal your credits. And visually, you can see this. Now, realize it's getting a little bit more complicated here. But if you put the debits in the right spots and the right amounts, and the credits in the right spots and the right amounts, all you did was just rearrange the information, and your debits still should equal your credits. If you didn't, you made a mistake somewhere else, and you have to go back and find it. The good news is that you're not making decisions. All you're doing is just looking how did you transfer the information. So once we've posted that information into our ledger accounts, once we've posted those journal entries in, now we create balances in the accounts. Okay. So for our cash account, on the debit side we have 50,000 plus 975. So that gives me 50,975 on the debit side. Okay. On the credit side, I have 1750, 1400, and 285. So that's 5, 13, 11, 12, 13, 14. So that's 24, 35. So I take my debit of 50,975 and I subtract the 2435, and that should give me a balance of 540. Okay, and since my debit is greater than my credit, this 47,540 is a debit, so I put it on the debit side, 47,540, and I underline that. Okay, so that's the balance in my cash account. And that's all we're going to do with the rest of these accounts. Okay, right? So for accounts receivable here, I only have one debit on the debit side, so that's going to obviously be 1835 on the debit side. Same with supplies, right? I have a debit of 225. Equipment is 1400, so that's the balance in that account. Furniture, 2700, that's the balance in that account. Accounts payable here is when I add up my credits, 292, 2925 for accounts payable. For common stock, it's 50,000. I don't have anything in retained earnings. Remember, I created that account. Service revenue, I have 10, 11, 17, 18, 2810 for service revenue, 1750 for rent expense, and 285 for my utility expense. Okay, let me edit 29. Okay, yep. Right, I just now this is one of the spots where students, can begin to also make a mistake in that they can transfer the information, rearrange the information, post it to your ledger accounts, but now you have to be able to do the math right. Because you posted to the ledger accounts, yes, your debits could equal your credits, right? And you could be relatively sure. But now what happens if you make a mistake in your math? Well, then, debits don't equal credits anymore. So make sure you're doing the math right. You add up all of your debits and get an amount, right? You add up all of your credits, you get an amount, and then you take your debits, you subtract your credits, and whatever that difference is, okay, depending upon which is greater. If your debits is greater, then your amount is a debit. If your credits are greater, then your amount is a credit. That's the balance in the account, right? So it's not a lot of thinking here. It's just being able to do the math. All right, now don't misunderstand me. I mean, everybody makes mistakes, even accountants that have been doing it for 30 years, okay? But we make very few mistakes, okay? When I first get started, you do make, you make more mistakes. But the reality is if you're doing the math and you're double checking it, okay, you're double checking your work, it saves you from making those, from having your debits not equaling credits and then having to try to find it. So if I'm doing this here cash account, I have 50,000 and 975. Okay, I know that's I can say that's 50,975. But when I add 17,540, 1,400, and 285, right? That's 5, 13, that's 6, 13, 14, 3485, right? Double check that amount, more than one time, okay? And then when you subtract it, double check that again, okay? In order to get your balance, right? Run the numbers more than once, okay? I personally kind of like, if I'm using a handheld calculator or a spreadsheet, I run the numbers 3 or 4 times, definitely at least 3 times, right? Just to make sure, right? I can run the numbers the first time and get an amount, okay? Let's call that amount 35. I can run the numbers a second time and get an amount 35. And I might say, okay, well, that amount is the same, so I did it right. Well, no. What if you made a mistake here and you made the same mistake here? But now when you run it a third time, you get, say, 33, right? Oh, well, why did I get 33 and I got 35 over here? Your mind, it is possible for you to make a mistake and your mind convince you that you didn't, and you make the same mistake a second time, all right? So that's why I run it 3 times. But if I get 35 the third time, then I'm relatively sure that I know that that number is 35. So in doing the math, you know, and running the numbers more than once, it's going to help save you from your debits not equaling your credits. Okay. All right. So it says here, we post to the T accounts, identify all items by date, and calculate the balance in each account. Okay, so we did that. And we're at 13 minutes, and it says prepare a trial balance at September 30th, 2014. Okay, so let's do that, all right? Right. We created this here chart of accounts, all right? Now, remember, the chart of accounts is nothing more than, a trial balance is nothing more than a listing of your accounts, which is your chart of accounts, and the balances in those accounts. Okay, that's all that a trial balance is. So if I have this chart of accounts, I can copy this again, copy this chart of accounts, print it out, copy it, whatever I want to do. But now I'm going to just alter this, right? And I would call this my trial balance. And of course I would write that out. And this is for September 30th, 2014. Okay. So that's my heading for this financial statement. And I need a debit column and a credit column, right? Because these are going to be the balances in these accounts, right? So for my cash account, right, since it's the first number and it's on the debit side, I put my $sign and I put the amount, 47,540. We had a balance of 1,835 for receivables, 225 for supplies. Now remember, I'm getting these numbers from here, right? Right? There's my balance for cash. There's my balance for receivable. There's my balance for supplies. 1,400 for equipment. 2,700 for furniture, right? 1,400. Oops. 1,400 for equipment. 2,700 for furniture. Now my accounts payable is a credit. So in the credit column, since it's the first number, I put a $sign. And then 2,925 for accounts payable. For my common stock, I have 50,000. For my retained earnings, 0. Now remember, I added that retained earnings account in there, okay, on purpose. Whether I use it or not, we'll see, okay. Service revenue was 2,810. Rent expense is a debit of 1,750, and utility expense was 285. Okay, so now what I need to do is I need to do a mathematical calculation, right? Why? Because I'm going to have the totals to see whether my debits equal credits, right? So when I add up all of these numbers, okay, I end up with 55,735, okay? And since that's the end of my mathematical calculation, I get a double underline and I put the $sign there. And I do the same thing for the credit column. $sign, when I add these four numbers up, I get 55,735 and a double underline. Okay, my debits equal my credits, and and this is my trial balance. Now, if the debits didn't equal the credits, obviously I would have to, go back and find my mistake wherever that was. Okay, so that's my trial balance. All right. So last, we're going to prepare an income statement, statement of retained earnings, and a balance sheet. And so I'm going to stop here and do that in the next video. Okay. And hopefully I'll be able to do all three in one video. All right. See you then.